Hello. My name is Darlene Kaler. I am a Lularoe consultant, and I wanted to help all my Lularoe friends because I'm also an enrolled agent with IRS. I work at H&R Block in Virginia Beach, so if you want to come see me there, you can. But this is to help you get your stuff together for your tax person so that you'll know a little bit more about what to get prepared. Okay? Um, I have been with H&R Block for about 15 years. I've been an enrolled agent for 5 or 6 years, I think. I have been in direct sales. I've been with like 4 different companies. I was with Stampin' Up for 10 years. So I've been doing the taxes for myself and um, everything for a long time. And so I'm just gonna go ahead and start because I only have 15 minutes. I've already done this once and it was too hard to edit, and it wouldn't take it because it was 18 minutes long. So, all right, here we go. First of all, I'm just gonna start with, and I'll be talking mostly to Lularoe consultants, but it goes with any direct sales. I mean, it's the same thing. Okay, first of all, if you have not taken your inventory for the year end, please do so, and subtract anything that you bought and you've added since the beginning of the year. I printed off our little size charts, and I just put down how many of each item. I did two. I did one for the elegant since it's a different price, and one for my regular. It also helps me know what I want to add to my inventory to increase my inventory in where I need it. If I don't need smalls, I don't want to buy smalls. All right, and I'll come back to inventory in a little bit. First of all, when you're doing direct sales, it's usually out of your house. So you're going to do a Schedule C. When it's your own business, you're going to do a Schedule C unless you're incorporated or something. But we're just direct sales out of our house, Schedule C. You're the proprietor. The principal business is direct sales. Your business name, so I'm just talking about what's at the top there. Your address is your address. Business name, Lularoe, Darlene Kaler. Don't put Darlene Kaler, put your name, because I'm Darlene Kaler. You are not. Anyways, enter the code for direct sales, in-home direct sales, 454390. 454390. You did materially participate, and then it asks if you started your business or not. Your tax preparer will know the rest of this stuff. I'm just trying to get you ready to do your taxes, okay? The part one is your income. So first you have your gross receipts. That's all the money that you made selling Lularoe or whatever you're selling. And then there's a thing for returns and allowances. And then on line 4, cost of goods sold. This has to do with your inventory. On page 2 of the Schedule C, there's a thing for cost of goods sold. So you're coming up with that amount that goes there. First, you need your inventory at the beginning of the year, which since I just started, my inventory was 0. And then it wants your purchases. And this is your purchases from Lularoe of the things that you're reselling. Now, I just bought a couple of Lularoe shirts from the supply company that I'm going to wear for advertising and stuff. That goes on a different place that I'll tell you about later. This is the purchases that you purchased as inventory, okay? And then we don't make anything, so we don't need the rest of the manufacturing part. And then you have the end of the year inventory. And the difference between that is your cost of goods sold. That's how much it cost you to sell those goods that you sold, okay? So then that goes back on page 1. So that's what you need to know for the income part. Now, for the expenses, you have advertising, You want your cards, um, your clothes that you bought to wear to advertise. That's debatable. So talk to your tax preparer on on that. Usually, normal clothes are not counted. Like if you have to wear a business suit to work and you had to go buy business suits, they don't count that. But you're not advertising business suits, So if you can wear it out, you can't count it. But if you had your company name on it and it wasn't something that you know, that's not what you wear on a normal basis, you wear it to work, then you count that. So anyways, I'll leave that open for discussion. Business cards, signs, banners. If you on Facebook, I started a business page so that I could boost it, and I pay for Facebook to put it up on their thing, people's feeds over to the side, so that I can boost my name, and that's advertising. So I would put that under there. Then we have car expenses. Mileage is the easiest, unless you use a car only for business. Your gas and stuff is mixed between business and going to the grocery store for your kids, you know. So the easiest thing, if you haven't been writing down how many miles you're going, probably on your calendar you have where you went. Go on MapQuest. Do from your house to their house times 2, because you got to come back. So their house to your house times 2. And then that's your mileage for the day. If you had to go to Office Depot to pick up paper and ink for your computer that you use in your business, that is a trip that you would get the mileage for. I have birds outside my window and the cat's freaking out, so my attention is if you see me looking over, I'm trying to see what kind of birds I got out there. Anyways, so all your mileage, you have to list it. Your tax preparer is just going to want the total mileage that you did for business. And she's probably going to ask you the total miles on the car. If you drive average, people drive about 15,000 just a year. Just it's not based on that. It's based on your business miles, so that can be averaged, All right. Then the next thing is depreciation. There are some commissions and fees if you have anything like that. There's other things listed down here, but I'm going to touch on mostly what I've dealt with. Depreciation, something large that you have purchased, like your laptop, you would depreciate over 5 years, which means you get to take a portion every year for 5 years. And so if you have anything large like that you bought, that will be depreciated. And also on business use of home, your house gets depreciated. I'll come back to that. All right, so insurance. I just found out that I don't think my insurance company would cover me having a business in my home without having extra coverage. So I need to call them and set that up. So that's something you need to find out from your insurance company, because heaven forbid you have a fire and you'll lose everything and you don't get the money back for your business. Okay, and legal fees, accountant, tax preparer, that kind of stuff goes down under legal fees. Office expense, planners, pens, copy paper, ink, postage, and don't forget, like stamps.com, it cost me, I think, $5.99. Anything like that all goes under that, okay? Supplies, that's where your bags and your mailing, the mailing things can go under office supplies or supplies. But supplies, definitely your racks, your hangers. I had to buy those little bins to put stuff in. So all that is your supplies, things that you're not selling, but you had to buy it to set up your boutique, okay? And then sales tax, Lularoe pay, so we don't have to worry about that. If you had to get a license to do the it out of your home where you're at, you get to deduct that cost. If you go to convention, save all your receipts, your getting there, your hotel, tips, taxis, buses, whatever it is, save everything. You get to deduct everything, including your meals. Put your meals separate. You get 50% of your meals. If you go out for a meeting with your upline and you have lunch, you get 50% of that. You get to take that. So save all those. Definitely put those separate. If you have something in your house and you serve snacks, those would be 100%. You get to deduct 100% if it's something that you're, having at your house, that kind of food, not restaurant food. Okay, and sorry, I'm trying to make sure I'm under 15 minutes, and it's going mighty fast. Okay, other expenses includes if you get fashion magazines because you're not comfortable with fashion, but you love selling the clothes. Fashion magazines, you get to deduct a percentage of your phone. Now be careful on this. Don't deduct your whole phone if you use it for anything besides work. My regular phone's my regular phone. I use it probably at least 50% business, so I'll do 50%. And the computer, the internet, the same way. Now, if your computer's totally for work, you can take your whole total computer. If not, take a percentage. It's one of those iffy things with the IRS. I'm letting you know what they look for and what they don't look at, dollars for renting, money for renting spaces for pop-ups, gifts for clients. We get to deduct when we give away clothes, leggings, all that stuff. So keep track of all that. And then, all right. And then business use of home. Because we have a place, this whole room is Lularoe. So I get to deduct that. So we get to deduct a percentage of all of our utilities and stuff. So let's say your home's, I'm just going to make it easy, 1,000 square feet. Your room that you have your Lularoe is 100 square feet. So a tenth of your utilities, a tenth of your mortgage interest and real estate taxes. Now the other 90% of that on mortgage interest and real estate taxes will go back to your Schedule A. Then you have insurance, home insurance. That's a tenth of that, so you have direct and indirect sales. The indirect covers the whole house, but you get to do a percentage, your electricity, your water, that kind of stuff. If you do repairs that has to do with the whole house, then you take a tenth. If it's on this room where I'm getting ready to paint, then I get to take the whole amount. So that's the difference. And then as far as depreciation, she will need to know how much you paid for the house and how much the land is worth. So if you can find that real estate paper that says how much your land is worth, it really helps them out. We have to look it up and try to figure it out ourselves. And sometimes that takes a little while. But you get to do depreciation on your house. And then all of that helps you. And for the most part, unless you're making mega money, you usually run a loss for a few years. You can run a loss without question up to 3 years. And then after that, you have to prove that you are trying to make the business work, so just talk to your tax preparer about that. And I think that is it. I will be doing another update later. I'm going to do a Q&A maybe on Periscope. And then at the end of that, I'll know what the questions are that I didn't answer that you might have. So I appreciate it. Come visit me at Lularoe Darlene Kaylor, Kaylor. And thanks. I'll talk to y'all soon. Bye-bye.